Good morning, everybody. It's Cowboy. It is Monday, and it is 8:35 a.m. I'm a little bit late today. Started 5 minutes late. Had a bit of a technical difficulty with all the technicalities. We went ahead. I got into a Bitcoin trade. It looked pretty good. It was a breakout trade, and it immediately got stuffed down. Bummer, but I did say when I told Algo Factory it was not a full-size trade. So I kind of put just a small amount on this. Everything is right for the trade, but except for like some liquidity that's down below. So let's take a look at what's going on with what I think is going to happen and then what may happen instead of what I think is going to happen, right? Because it's not about what I want to happen, it's what I think is going to happen. And that's a big distinction in trading, right? You don't want to trade based on what you want to happen. You want to trade based on what you think is going to happen. That's key. Maybe price is going to go down. Maybe you don't want price to go down because you hold a bunch of XYZ coin or stock, whatever it is. Well, just because you want it to go up doesn't mean it's going to. And if you think it's going to go down, if it looks like it's going to go down, you want to either go short or, maybe hold through or whatever your plan is. So look, this is a pretty typical bullish formation. And if you saw yesterday in Algo Factory, I put up a chart and it talks about where the liquidity was below, right? So let me bring up the actual picture here because I've already changed the chart. You can see that I thought price might dip down before it headed up. And it actually went ahead and popped up. So when I did this chart, the arrows are over to the left. In fact, let me bring up the actual chart that I put on last night. You'll see it hadn't popped up. It was still at the top of this big triangle. This triangle is bullish. You have higher lows. I'll go over that on the main screen here. But just so you understand, I thought it might head down and pop up. I thought it might stop running people. And in fact, that was in the description. And so it's possible that still may happen. But what's now happened is that at least when I entered this trade, price had popped up strongly and broken above some of these highs right here. So it was almost you would call it a breakout. Looked like a breakout trade. It immediately got rejected down. And the reason I didn't put a full size on there was because there's liquidity below price. I thought I might get stop ran. So I put a smaller trade on there just so I didn't miss out on the move and just so I could get some really good risk to reward. And if I did win the trade, I would do great. I think it's better than a 2-to-1. But you have a fair amount of liquidity at 89,500. So price could go down there to grab that liquidity, which is right here, 89.5. So basically right at the bottom of this, big triangle, which is below price, right? So there is some liquidity right there. There's even some more below, but I would be a little concerned. Now, if price dove down to grab that liquidity, it's fine. I'll just take the trade the next time it breaks out. This is a 2.67-to-1. I can take 3 of these, and if I win 1, I'm still in profit, and I'm decently in profit at that point. So I can actually lose 2 of these and then win a third, which is great. So that being the case, and by the way, the next time I take this trade, I could get better than a 267. This is just kind of a basic trade on that. So let's say good morning to everybody. We got Valley Girl. Good morning. Well, Cool Cat, it's always good to have you, man. I'm glad to see you back. I know you've been busy. And then we got Mab Vet. Good to have you on as always. So let's go ahead and talk about the other liquidity real quick. There's a little bit more down by 87.6 and then a fair amount down at 80,000. So we'll throw that up on the chart and I'll talk about why that's important just in case you're kind of new. 87.6, and then there's this one down here that's been there. And liquidity, those are liquidations. So on the futures market, this is where people's trades would liquidate. If price goes down here and they're using leverage, they're going to lose their trade. And those futures traders tend to all group around the same area with these liquidations. So what that means is that across the board, a lot of the futures exchanges would collectively make a lot of money if price were to go down to this area. And of course, that just happens to me. The price sometimes goes down to that area. And I'm not saying anything. I'm not saying that they're doing it. I'm not saying they're not doing it. I'm just saying. So I think we know what that means. That said, at this point, the algos are fair for a move up. But again, because when you have price condensing into a small area like this, what that means is that the volatility is going down. If I were to put the ADX up on this chart, I don't know if it's going to be on this time frame, but let me put up ADX. You see how this line, let me do this here. See how this line goes down and it just like dies right here? What that means is that the volatility is nil. It's really, the volatility has gone away. And what that means, interesting. Oh, here it is. What that means is that when the volatility is low, it's a lot cheaper to push price around, right? Now, when the volatility is high, that means the market is active. A lot of people are pushing price in whatever direction it's going, up or down. But when the volatility is low, what that means is that not a lot of people are pushing price around, right? But there may be a lot of people with stops in a certain area. There may be people who, maybe have buy or sell orders in a certain area, and stops are effectively sell orders when you're long. So that's why price can get pushed into these liquidity areas, right? Good. So that's Bitcoin. That was a pretty long explanation. If I were to go and zoom out, even if price breaks down, the algos are good for a move up. Even if price shoves down into these areas, and that's fine, price wants to head up. And I've got a short-term target of about 97.6. All right, that's based on Fibonacci's. So 97,600 or so is a short-term target. Now we're going to see just how bullish the bull market is. We're going to see how it behaves if it makes its way up to 100, which I'm pretty sure it will. If Bitcoin can break through that, we're going to see just how bullish Bitcoin really is. If it crashes through it like it was nothing, then we're looking at probably 140 to 160, 120 minimally. Those are my guesses. No one knows. No one knows the future, especially in markets, but that's probably what we're looking at in that scenario. So we'll keep an eye out. And again, if this trade stops out, it's fine. It's a smaller sized trade, so it's not going to hurt me that bad. It was a little higher risk because of that liquidity, but you know what? When the market is exhausted, even when there are amounts of liquidity, as long as they're not huge amounts of liquidity below, price will continue up. That's what happened when price broke above all-time highs back here during the election. There was liquidity all below here. Price just kept going up. So it really depends on market exhaustion. And there have been, there's been calls for price to head back down to about 83,000. And I've talked about that. It's in my own videos where price may want to go down to 83,000, and it could. They painted this bullish look right here, but price could just grab down and go all the way down to 80,000. It really could. But right now, it just doesn't look like it's going to. But that's right now. We could paint something entirely different. If price dove down and grabbed one of these lower liquidities, say like 87,000, then that's going to change everything. And then we take a look at it at that time, and we make a determination based on that change. So the live part of the show is over. So at least for the public, the YouTube version is over. Thank you all for sticking with us. Apologies for the late start. I thought I was going to be on time, and then freaking long story short, I had an issue with the camera. Had to fix that. Not used to using the camera, and that's fine. Put my my beautiful mug up here for everybody to see. But thank you all for joining. We will go ahead and we'll be back tomorrow. We're not doing live on Mondays anymore. Mondays are going to be something different. Long story short, the market sucks on Mondays. My hit rate is not that great on Mondays. And that's a lot of the reason that is because over the weekend, a lot of stuff's been going on. So essentially the market is setting up for the week, and a lot of news and other stuff happens over the weekend when most of the market was closed. So because of that, you have a lot of kind of like, I don't want to use the word pent up demand. That's a bad term. That's from something else, but you just have a lot of stuff where the market pressures have built up for 2 days in one direction or another for one reason or another. And therefore, when the market opens up on Monday, you're going to find that, price will make a move in surprising directions. It just is not as predictable on Mondays. So I'm not going to really trade on Mondays outside of some scalps, stuff like that. That said, thank you all for joining. We're going to see you next time. And as always, do not forget,
join us or die.